Guys, one of the most beloved aspects of the stock market would be dividend investing or dividends in general, right? It serves as some sort of passive income, some sort of cash flow, in addition to your day job or your business income. So we're gonna share with you. Actually, there's a little bit of a twist when it comes to dividends, and not all is good. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description, especially if companies know that investors like dividends and they try to rush it. I'll share with you our full thoughts. But before that, speaking of passive income, Momo has a very interesting offer in their brokerage services where you can get a guaranteed return of 5% per annum, and you can get some Apple shares as well. Jonathan, share with us more details.
Yes, so if you deposit 1,000 ringgit, you can actually claim 100 ringgit cash reward. And if you use our code, which is the top text over here, FIRE24, you can get an additional 40 ringgit cash rewards. And to get your Apple shares, you need to deposit more money, which is 10,000 ringgit to claim 0.5 Apple shares and 30,000 to claim 1 Apple share. And yeah, if you are interested to sign up for Mumu, and you want to get all of these rewards, the links will be in the description and comments. Now, coming back to dividends.
Yes, so right now, as of this is the third quarter. We're in the fourth quarter, but the third quarter is being reported. 283 quarterlies have popped up. We have about 500 odd left to go, and out of that 283, about slightly more than a quarter, call it 30%,
30%,
almost 30%, declared dividends, and of that 84, more than 10% declared special dividends. So for those of you who don't know, typically a dividend-paying company pays dividends in sequence, or they pay in a regular schedule, maybe twice a year, some 3 times a year, some 4 times a year, some once a year. So special dividend sometimes comes on to the scene where perhaps something happened in the business. Maybe they sold something, or maybe they had a very good year in the business and they decide to reward the shareholders. And that's what a special dividend usually entails.
Yes, and this is actually the very first time that also some of the analysts did commented. They say that it's very rare to see such thing happen, which is companies are rushing to pay.
Now, we did find out eventually why. And now, again, the story is not full yet. As we said, only you still have 500 over companies that haven't reported yet, right? Only a third has been announced. But we think this is the big reason.
Yes. Okay, but just to share, what are the companies that have been giving out dividends and special dividends? So you can see that Lysec, MSC, Sarawak, and Focus Lumber, and also Maybach, these 3 companies in particular,
5% above,
they gave
more
than 5%. And and also Lysec is the one that has been been all the talks recently.
That's right.
13% dividend yield. And not only that, there's a few more companies, even Corsan, which is still in the midst of recovering. They've been giving out dividends as well. So what is actually rushing all of these companies to pay dividends? So this is basically by per share basis. And this is basically by the share price movement. When they announced dividend, share prices went up. But for Sarawak Plantation, they still haven't reflected, because this one was last Friday's price point. So today's price, I think it went up a little bit. Now it's like 2 ringgit and 40 cents.
Oh, okay.
So yeah, it did reflected a little bit on the dividend gains. Now, but what is interesting is that you notice the payment date, right? It's all before January 2025.
Why is that?
Yeah, and also you see Sarawak Plantation, they used to give at January next.
Now they pay.
Now they pay
forward.
before.
So why? Why?
Yeah, so why? So the question you may be asking is, what's the rush? Obviously, if you've been following the budget 2025, there's this all talks, which is the 2% dividend tax.
That's right.
Yeah, so they have been rushing to pay before the assessment date, which is on January 2025. That's why if you see the upcoming few quarters, notice their payment date is all before January 2025. That's the reason why. It's because they are just they don't want to pay the 2% dividend tax. And another question that you maybe be asking is that whether this is a once-off. Now, in my opinion, I think it would be, because this is basically what incentivizing people to actually, or at least the companies, to quickly announce their dividends, or whatever cash they have inside their balance sheet that they want to unlock it. This is their time to do it.
Yes.
Yeah. So this is actually not really a good sign, because potentially it will also mean that there will be a lesser payout in the future.
Yep.
Because let's say you've actually planned out that you want to pay a certain amount next year or the next year, right? So what these 2% dividend tax means is that potentially they will be taking some amount for next year and they're paying out this year. So there'll be maybe lesser payout, assuming let's say their business didn't grow lah. Let's say
right.
business is just remain the same.
And I also think psychologically is quite, I think, short-term
Yes.
behavior, because we remember 2% tax is not punitive, meaning it doesn't really change your future a lot, you know. So I'm not sure why they're doing this. But anyways.
Yes. So just now you mentioned about short-term. Definitely, most likely the share price will be reflected, it will be priced in. Assuming, let's say, if there's lesser dividend payout in the future, right? Definitely the market will think that, hey, maybe your business is not good because last time you paid like this amount, which is high. Now you're paying this amount. So yeah, it creates like a not so good impression to the market. All of this is just because to satisfy like certain measure, which is the 2% dividend tax, which I don't think is quite good lah. If you want to market yourself as a sustainable and consistent dividend payer. So yeah, that's about it for today's video actually.
And the reason we shared this video today is for you guys to watch out. You have to watch out for things like that. You might think it's great, you know, they're paying a lot of dividends. And perhaps if you are an investor in one of these companies, obviously you're very happy. But you also have to ensure that is sustainable, right? Everything should be treated on a case-by-case basis. You know, just because we say that special dividends, in our view, that is used to avoid these 2% taxes is a negative thing. But for that specific company, it's not necessarily the case. For example, if a company, sure, it pays maybe 20-30% more dividend, but it still has a lot of cash in the balance sheet and the cash flow is still strong, then, you know, you can pretty much ignore this and, you know, maybe even enjoy this special dividend as something that rarely happens. So it's not necessarily a bad thing. But we want to share with you this because there's still going to be a lot of quarterlies coming out as we speak. And they will be, I foresee, very similar things, right? And we just don't want you guys to be hoodwinked or to be tricked.
Yes.
Well, I'm not saying the management is trying to trick you, but sometimes it might give a false impression that, the company is doing well. When in fact, they're just trying to avoid something that was announced in the budget a couple of months ago.
Yeah, just imagine, like, let's say EPF this year announced 7% dividend rate. Then next year they announce 5%.
Yeah, exactly.
So that's basically the impression of.
It depends on why they can announce the 7%. If they announce the 7%, because they've had a good year, okay, not too bad. But if somehow they are announcing the 7% because of some regulation and nothing fundamental, then you know, it may not be the best thing.
Yeah.
Anyways, that'll be it for today's video. Just a short one, but an important one. Regardless, if you've been always looking to find a systematic way to invest in the stock market, and you are, you know, you're a bit of a headless chicken and you don't really know where to go, or you don't have the time to put in and the resources to invest, Fire Pro or our Pro program is perfect for you. For one, we have model portfolios for you to reference, right? We have the Pro Malaysia and the Pro Global portfolio, as well as the boring portfolio. The Malaysia one is Malaysia, global is global, and the boring one are more for dividend oriented. So if you look at the dividend companies that we have in the portfolio, they are typically not the ones that give all these you know, weird special dividends. So if they do, is, you know, it doesn't really impact them that
it's
much.
more sustainable and it's consistently growing.
Yes, much more sustainable, and he has been a big performer for us actually. We did not expect this. The November results are not out yet, but we are anticipating anywhere between 10 to 11%.
Yes, we are beating EPF already.
Yeah, so yeah, in less than a year. So we also have these write-ups for the companies that are inside these portfolios, so that you can actually, you know, read them, and they're all short and sweet. It takes you no more than a cup of coffee to finish them. They are very jargon light, and even if you do not get the jargons, you can still chat with us on Telegram, and we'll be sure our response time is one of the fastest. Not just us, but our members as well, to explain to you why the stock is like that and why it's not like that. And at the end of the day, we just want to shortcut your research by 90%, among other things. And if you want to get a taste of what these write-ups look like, so that you can speed up your financial success in the investing world, check out a free sample. Give it a taste. If you like it, hop on the program. If you don't, that's all right. Continue supporting us. And if you are neutral, you're not sure, send us an email, leave us a comment wherever social media platform you are, and I'll see you in the next video. Bye bye.